Good morning, everyone. Welcome to our Tuesday morning trading session. Hang on one moment here. I'm going to get you my screen sharing going on. So the North American markets just opened. As usual, I'm following the NASDAQ here, but please don't be shy about asking for other markets that you might be interested in. This is your trading room after all. My other monitor, I've got soybeans and crude oil that I'm following. So you can see here on the Eagle, yesterday, pretty decent little trend day, relatively quiet, but the market did make decent gains. No real signal here on the Eagle, by the way. Our signals all came off the subsequent tools, but that's why we have three different tools. And a little bit of a decline in the overnight, almost took back all the gains, and then here we are this morning with a possible sell signal right here on the Eagle. Well, just triggered right here. Technically, it's a rule of three signal. Let's see if we can't get a second push on that one, in which case, oh darn it. Can I sneak it near the high? Oh, stinkers. All right, well, I don't like to go in this tight. Maybe I can risk it right there. Okay, not much of a second push on this one. Let's see if there's alternate signals to take. Yes, here on the Hawk, we had a 4-arrow consolidation. 1, 2, 3, 4. And we are trading near the lows, so it's still very, very early. We're only a couple minutes into this morning's session. I don't usually like to jump on board too many signals right out of the gate. And here in the Raptor, for you Raptor traders, we're looking at a trend change signal, or a cloud crossover, pardon me. A cloud crossover with a second push entry. So the cloud crossover occurs when, hey, the clouds cross over, the market comes down, retreats into the cloud, and then the cloud supports the market, pushes it back out, produces a signal, and from there we anticipate that the market should head lower. Now, we did get a chance here on a second push entry. The signal has engaged. It's retreated away. Oops, sorry. It's moved away from the signal. Oh, and they actually slipped us a few ticks there too, stinkers. I better get a stop strategy in play. Okay, that's a little tighter than I would like also, but we'll see. So long as they don't move against us, I won't have to move that back. I think that's about as much as I want to commit to right out of the gate. And no, they got the break-even trigger. Will they get the first target also? Oh, come on, you. See, here's always the problem when you're taking a delayed entry, is that all the high probability targets are calculated from the hash marks. All right, so we hit our first target. And moving lower nicely. I think I'll go with a slightly more aggressive stop strategy now. Oh, maybe we'll do the parabolics. Try to protect a little bit more of that open profit. Right now it appears as though the seller's in control. I suppose I should do something with my other stops also. No, we hit our break-even trigger here on the Eagle trade. And we're just hovering above our profit objective. Here too, you can see had I gotten in on the hash mark, then we would already be at our profit target. In fact, I'm going to protect more of that profit. And now I may protect even more. There, no need to worry about it. Okay. Hooray for us. So we hit our high probability target here on the Eagle. No problem here on the Hawk trade, where we had that first micro macro cross / 4 arrow consolidation. Great follow through there. And here on the Falcon, we didn't take a look at the Falcon for any signals, but we did get our trend change signal here in the wee hours. Basic trend line touch signal here off the market open. Nice little bounce off the primary resistance. Held here on the primary support, fell through, and well, let's see if we stay below here. We should see 47.94. We've already moved 2 full zones, and as you know, sometimes when you move 2 zones, the market is going to give you a little bit of a reaction, but good to keep in mind that somewhere around 47.94, 95 possible target. If in fact the market does keep pushing lower, which so far, if we take out this low, is a very real possibility. 47.95, 94 would definitely be within reach. Come on. How are we doing here, by the way? Oh, that's not bad. So we've already taken profit on one. Depending where we stop out here, we could be maybe pick up another $150 or $200. Crude oil, I know there's a few crude oil traders in the room. Crude oil kind of flip-flopping a little bit. Here's crude oil on the Falcon. You can see how it's pinched between the secondary resistance and the median line. Market comes down, hits the median line, goes up, hits the secondary resistance. Now we're kind of flirting around the primary resistance area, which has also held the market a couple of times. But no discernible trend here to crude oil. Crude oil kind of been in sideways mode since yesterday afternoon. Didn't really do a whole lot after the morning session. All right, looks like we're about to get tagged. So we just got stopped out here on our Raptor trade, as looks like we've got a little bit of a bottom. Well, that was still a nice way to start the day. And it does set a bit of a bearish tone on the day, doesn't it? As slow as the markets have been of late to develop, we could be on hold here for a little while. Until we get our next good shorting opportunity. I would be looking, remember here, 82.12, we were talking about yesterday. Sorry, 82. First day with my new lips. 48.12, remember yesterday, we were looking at this whole 48.10 to 48.12 area. Well, that's our primary support line today. I would not be surprised to see the market retrace somewhere around there, around 48.10, 48.12 maybe, and even produce a sell signal. I think that's going to put us pretty close to our hard edge also. Yes, it is. So you see here the hard edge on the Eagle and the Raptor, currently forecasting 48.13, well, 48.13.5 to be precise. But as the market drifts lower, that should end up somewhere around 48.10, 48.12. Adam just sent me the link, by the way, for an upcoming webinar that he and I are doing. I'll put that in the window. I'm sure he's going to send it to you anyways, but there you go. I'm going to be doing a presentation for Trader Kingdom next Monday. Nope, sorry. Not next Monday, the 30th. If you've spent any time at all in the trading room with us, though, or with me, you know that you already know most of the things we're going to talk about. All right, here is a 4-arrow consolidation. 1, 2, 3, we're about to print arrow number 4. This is a high probability signal. The problem I'm having with this signal, where do I cover this trade? Right? Ideally, believe it or not, I need to cover it up there. And it looks like the signal's going to work out. We're probably at our scalp target or pretty darn close. I'm going to just place it here so we can watch it play out. It looks as though it would have hit our break-even trigger and we would have now be stopped out at break-even, so, or break-even plus 1. So no harm, no foul. But here's the issue. When there's very little structure, sometimes it's not the signal that's the hard part. The hard part is, where in the world are you going to place your stop? I liked Andrew's post here. Andrew writes, it appears to me that in this day of electronic trading, news has very little bearing on the market direction. Yesterday, news negative and up it goes. But today, news positive and down it goes. So the moral of the story is don't pay attention to the news, just be aware it's coming. You know, Andrew, that's been going on a long time, long before electronic trading even. So much so that traders would always say a market rallies or a market falls on bullish news and rallies on bearish news. The thing with the news is it's not the news itself, it's how the market perceives the news. Is the news more bullish than the market expected? Then the market will rally. Is the news more bearish than the market expected? The market will fall. People are always throwing me these figures from crude inventory reports and from the World Agricultural Supply Demand estimates. They'll say, oh, well, wheat is estimated at however many millions of bushels. Well, that's all well and good if you're intimately familiar with the wheat market, which I'm not. If I just throw out a figure and say, well, the wheat production is estimated at, I don't know, 5 million bushels more than last year. Well, what does that mean to you? On the surface, it sounds bearish, doesn't it? Oh, we have more wheat than last year. Well, what if the market was expecting 10 million bushels more? Well, then it's, well short of what the market expected. So the thing is, the market always interprets the news beforehand, and then when the news comes out, is it more bullish or less bullish? That is one advantage to technical trading, is that we assume as technical traders, because real people are putting real money on each of these prices, that all those things are already factored in. You can make arguments for or against, but that's kind of the crux of it. But yeah, I love the post. Oh yeah, Andrew follows up. He says, well, look at crude though. Iran said they will keep pumping until the earth caves in, but prices are going up. It's senseless. Oh, there's no doubt there's some market manipulation going on. Crude oil used to be, believe it or not, crude oil used to be relatively easy to trade. Before prices made an extreme rally, you get up to $120 a barrel and then they plummet to $30 a barrel. Before that happened, crude oil would trade between 85 and 105 a barrel. When prices got to 85, you would buy. When prices got to 105, you would sell. Anywhere in between was a bit of a crapshoot. But those were the extremes for crude oil. So what I'm waiting for with crude oil is I'm looking for that new range to develop. Is it going to be between 40 and 65, or wherever? So that we know, okay, well, prices are down at $40 a barrel, let's look for an excuse to buy. Prices are up at $65, $70 a barrel, let's look for an excuse to sell. And then you've got, the refineries as well. Heating oil, manufacturers of heating oil still need to sell heating oil in the winter. Gas refineries, that's a huge end user of crude oil as well. But heating oil, or let's use heating oil as an example because that's pretty obvious. Well, winter is still, 5-6 months away in the dead of winter. Well, if you're a heating oil manufacturer, you're not going to be buying crude oil in December, right? You've been buying crude oil now all summer long, so that you can manufacture your heating oil, get it in storage, so you have it ready to sell in the winter. So that could be part of the reason oil prices are rallying a little bit too, because this is the time of year where heating oil manufacturers get a little bit more aggressive about topping up their inventories. Andrew, great question, Andrew. You guys are actually full of good questions here this morning. Stephen, I'm going to get to your questions here in a moment. Andrew asked, what would you say is easy to trade now? NASDAQ, for my liking, is too schizophrenic. Um, if you're day trading, I think leaning toward the stock indices is pretty good. That could be the Dow, that could be the NASDAQ, that could be the Russell, that could be the E-mini. It could even be the European currencies or stock indices like the DAX, or the DAX is pretty expensive though, or the Stocks 50. Stocks 50 doesn't move. You really have to dial down our settings here on the DTS system. The thing I like about the NASDAQ is the tick value. You know, at $5 a tick, you can frame up a trade where you have a reasonable amount of risk. You're not strangling your trade, right? So, for instance, here, this 4-arrow consolidation, I just showed it to you right here. I can't afford it up there, but I could probably afford it above this swing high or maybe here. So let's say like that. Okay, so I can get one contract on. This gives me a little bit of maneuvering room. And it still works out that if the trade fails, I haven't lost an exorbitant amount of money. Now, this is for my account size, but it does tend to favor the smaller traders. Gold is good, except gold moves very quickly sometimes. It's a little bit boring. Soybeans is a good market in the summer. Is boring in that it takes a while sometimes to develop a signal, but once the signal prints, the market's pretty much guaranteed to keep moving in that direction. So here's a signal out of the open in soybeans. Can we cover it up there? Yes, we can. I've doubled my profit objective, or a little more than doubled my profit objective, because soybeans does have a tendency to run out a little bit. But like I say, it's a little bit boring to watch otherwise. I haven't done it on a day trading level, and it's been a very long time since I've even looked at it end of day. But coffee is the world's most popular market. Well, I shouldn't say that, depending on how you measure it, but coffee is one of the world's most popular markets. I'm not even sure I can get the data feed. Hold on here. It's been so long since I looked at it. Let's see if I can even load it up. And what we would be looking at is we would be looking at the KC coffee futures. Oh, maybe we can. Maybe I can get this one. All right, let's see. Oops. Wrong button. Okay, let's see if that loads up. Crude oil, if you can afford the risk, crude oil makes some very substantial moves. Okay. Okay, well, coffee did load. Oh, it is ticking. I threw a Geiger counter on to see if I actually had an order flow, and it does look like I am getting an order flow in coffee. All right, well, this might be interesting to watch. Now, here's coffee, and you see the daybreak lines? See how they're a little bit close together? That tells me that the stock settings probably a little bit too tight. So let me throw coffee on my alternate settings. The alternate settings, by the way, are 4, 4, 6. That's a 4-tick hawk, 4-tick falcon, 6-tick eagle. The easy way for you to remember that is that's the telephone prefix for Moose Jaw, Saskatchewan. Yeah, Andrew, coffee is on the ICE exchange. So if you don't have the ICE exchange, then I don't know if there's a mini coffee available or not. But you can get some very nice moves out of coffee. And it looks as though the signals are pretty solid. Here's a first micro-macro cross. Here's a macro pullback. First micro-macro cross lower. Now let's see what it's like to try to play this game. So if we put it here, okay, so we could probably run a reasonable stop. Yeah, see, it's going to be a little bit more expensive, but you can run a larger profit objective as well. I've just gone with a default 10-tick target. It's a pretty expensive game to play, but there's some nice moves out of there. Maybe not the best market for newbies. That high tick value is a bit of a turnoff. I may leave that up there just for a little while, see what happens. Yeah, out of all the markets that I played with, the NQ is probably most to my liking. But I know the E-mini is by far more popular. Yeah, I agree, Andrew. Andrew says the E-mini is way too slow, which is why I watched the NQ. Everything's going to be slow in the summer, though. And you got to be careful, too, not to become one of these trading junkies. Remember, we're doing this to make money. There's a lot less expensive hobbies if you're looking for a thrill. All right. Steve asks, Eric, hey, how is your back? Much better. Thank you very much, Steve. I had a herniated disc that was causing me all kinds of pain. Oh my gosh, I've never felt pain like that. I still wear a brace in the mornings just to help support my back because sitting in the chair can be a little bit hard on my back. But back to golfing, and I've almost got my golf game back to where it was. No, it's doing much better, thank you. A friend for my birthday got me a cold laser treatment at a local clinic, and I'd never heard anything about it, but I know a couple of people who have done it with amazing results. And I went and did it the other week, and I have to say it helped. Certainly didn't make things worse. Steve's asking, B, where did you go last week? Nowhere special, Steve. I had a couple projects on the go that were going to interfere with the trading room in the morning, so I asked Adam if we could just put off the trading room for a little bit. No, it wasn't a vacation per se. It was just a schedule conflict. So I did get to sleep in a little bit in the morning, which was nice, but no, still had lots to do. C, The paper said George Soros bought $1.5 billion of puts against the spider. I can't figure out what strike price he bought. Do you know? Okay, so he bought the puts, did he? He's not selling the calls or selling puts. So if he bought the puts, he's obviously looking for the market to head lower. If he bought a $1.5 billion worth, he didn't buy one strike price. He probably bought a series of strikes. And if you're looking to do a similar play to what he's doing, then actually a safer play than buying the puts is selling the calls. Now, hold on a second here. I will draw you a picture. Let me get my NQ chart here, build a new chart. All right, so here's the NASDAQ just on the daily. Most traders who are doing option plays are looking at a longer term chart. So a lot of traders are starting to think the market's overextended. If you threw a ball in the air, the ball would kind of crest, it's slow near the top, and then it would start to head lower. Same thing as here, right? You throw the ball in the air, it crests, it heads lower. It crests, it heads lower. It crests, it heads lower. So a lot of traders are looking at this and they're looking at the ball kind of peaking and they're thinking, okay, the market's going to start heading lower. The obvious strike to sell is somewhere here in the middle around 4,500. Depending, if you're a fib trader, you can anticipate that the market's probably going to trade back to halfways. Those, I haven't looked at the strikes. They could be a little bit expensive. The alternative strategy is that you could sell a call. So you could sell a call maybe at 5,000 or 5,100 or 50-50. And you could probably make, and again, I'm just spitballing here because I haven't looked at the cost of any of these options. You could probably sell these for $400, $500, $600. The difference between buying a put and selling a call, so the call is above the market, the call you expect the market to go up, the put you expect the market to go down, is, let's say we sold a put at 4,500 and they would be selling probably he would be probably buying the December contract. Oh, although there's almost a month left on the September. Okay, well, let's say he's buying September. So he's gambling that within a month, the market will be trading around 4,500. If in a month's time the market is not trading at 4,500, his investment expires worthless. If the market trades at 4,550, his investment expires worthless. If he's selling, or if he's buying December ones, then he has until December for the market to get past 4,500 to make them worth anything. The thing with selling puts is that, I got selling on the mind. The thing with buying puts is that, let's say by December the market is down here to 4,300, you get a lot more bang for your buck with the options, because for $1.5 billion you can load up perhaps with twice as many options as you could futures contracts. And yet, when they're in the money like this, well, since you have twice the value, you've got a lot more return for your money. It is a little bit more of a gamble, though, I think, than selling the call. Now, selling the call means that by September or December or whatever, the market is not trading above 5,000, you get to keep the money that you sold, the premium, it's called. You get to keep that money for whatever you sold that option for. So let's say you sold it for $500, and by option expiration, the option is selling for, or is trading as high as $49.90, you still get to keep the money. Right? It actually has to trade at 5,000 or better. So it's a safer play, and I'm sure he's selling some calls as well. But to answer your question, no, I don't know what strike values he would be selling. He would be selling, I would guess, at least 4,500, because that's an obvious place for the market to go. If he's selling $1.5 billion, he's probably selling all the way down. He's probably got some strikes at 46, 45, 44, 43. But he knows that unless those are in the money, or unless he sells them before they expire, so let's say he's got some at 45, 43, 41, and the market starts to head lower, even though these down here are not in the money yet, they will be worth more. So he may choose to start selling out of some of these positions if he suspects that the market is not going to retreat as far as he thinks it is. These would be worth a whole lot. These would be worth more than what he paid for them, but not as much as if he had just sold outright futures contracts. So it is a little bit more of a sophisticated play. I don't think it's a real surprise that the NQ is setting up to head lower. I think a lot of traders are looking for a correction this month. I know I am. I don't suspect it's going to be a prolonged correction. You see, every time the NQ has made a correction, back here at the beginning of the year, that was the biggest correction we'd seen in a long time. But the NQ always recovers. And you can be sure he'll ditch if the conditions start to change. Oh yeah, Tony pointed out, Eric, we got a first micro macro cross higher right here on the hawk. We certainly did. This one, so first micro macro cross here. Again, the structure of the trade determines that we have to cover or try to cover below the low. Why? Well, the market brings you in. Even though we're running a scalping target, which is pretty easy for the market to get to, we may see it reverse and try to retest the low one more time before heading higher again. Now, when the market is changing direction like this, you should always look for that retest of the low. And the problem is that the market may be entering a trading range as well. The buyers may not be strong enough to send this market higher, but they may be strong enough to force it into a sideways range, in which case we don't want to be buyers at the top end. So the market brings us in, retreats against us. At this point, when the market starts to recover, we can start to get more aggressive with our stops. And so we can start to roll our stops in a little bit. And let's say the market chooses to reverse right here and stop us out. It comes down and stops us out. Well, sure, we got stopped out, but we got stopped out for about half of what we initially risk. compare that with starting the trade with our stop right here. Remember, our risk amount doesn't change. We would have been tagged for the whole amount right here as the market made that initial move lower. So it's a bit of a balancing act, but yeah, you want to try to keep your stops as far away as possible to give yourself a chance. So nice call there, Tony. Good eye. Yeah, Andrew says, yeah, but who's throwing the ball? It doesn't matter. So long as we're on the right side of the trade, it doesn't matter. All right, so we did manage to retreat here back to the hard edge. So we're back at 48.12 area. That's our primary resistance line. It's enough to know sometimes why the market is behaving the way it is without actually knowing who's driving it. Like here we are. If the market is going to develop into a trading range for the rest of the day, so we get this kind of thing going on. Well, we know there's sellers down here, and we know there's going to be buyers down here. So sellers up here, buyers down here. So when the market gets to the top end of the range, we're going to look for a reason to sell. And as it gets to the bottom end of the range, we may not necessarily look for a reason to sell, but maybe we'll be more aggressive with our stops. Maybe we'll take profit. If I shoot a trend line across here, I think we may have breached the trend line as well. All right, so possible green bar sell working there, watching the hard edge here on the Raptor for a possible bounce. Crude oil still sideways, soybeans still heading lower, plodding lower. All right, well, we're just waiting. Not much else we can do with it. So a lot of volume on these bars here. Looks like we're getting a little bit of a turning point. You see the equi volume bars. Big fat one here. A couple small fat ones there. Big fat one here. Not as much volume on the Eagle chart. If we get a bounce here, certainly if I get a sell signal on the Eagle, the green bar sell, I may give that a go. We're almost back to where the morning session began, which would be here. This would be the high of the morning, 48.15. Well, we got a little bit of a bounce here off the hard edge here on the Raptor. Let's see if we get a double pullback into the hard edge that we can sell. Soybeans making just a huge move lower today. So here was soybeans earlier. The signal out of the open. See what I mean about once they settle on a direction, they're pretty much committed. So moving almost 3 zones. They get below the primary support. There's zone 1, 2, zone number 3. Not exciting, but certainly profitable. Okay, we've got a little bit of a tug of war going on now in the market. As the buyers and sellers try to feel each other out, see who's got control. At the moment, the nod goes to the bears. This might be a good time to go get a coffee, though. I'll be right back. Okay, what did I miss? Not a whole lot. Not yet, anyways. Getting a possible sell signal here on the Eagle. market fairly neutral here for the moment. Andrew is asking, Eric, what are your settings for soybeans? I'm using the alternate settings, 4-4-6. So 4-tick Hawk, 4-tick Falcon or Raptor, and 6-tick Eagle. You see, what happens is some markets, very few, but usually those markets that are trading at 12.50 a tick or just not moving that fast during the day, you're going to open up your charts and you're going to get, day breaks like this. That tells you that there's not enough going on within the session itself for you to take signals. If you see your chart like this, when you open it up, that means you should try the alternate settings. Otherwise, you just won't get enough to trade during the day. If you're looking for end-of-day signals or signals that you're going to hold overnight, well, that's a different story. But if you're looking to day trade it, then you need, and the markets can get quiet. You don't have to panic just because you get a couple of days like this where the markets get a little quiet. Sometimes on the Eagle with the NASDAQ in the summer when it gets quiet like this, I'll dial it down to 10 ticks instead of 12. Just so that it might generate another signal or two. But generally speaking, you want your session to at least be the width of your chart or your monitor. And then you want to take a look at the signals and see how the signals generated. Was there follow through? Was it a reasonable signal? Like here's a rule of 3, 1, 2, 3. Followed through, came back, hit the hard edge, produced a hard edge bounce signal, had some good follow through. So that all tells me that the brick size is the correct size. All right, so here we've produced a hard edge bounce. We've got a chance for a second push on the signal, which is not a bad strategy when you're trading the Eagle. A lot of signals on the Eagle will give you a second push. Can I cover it? Oh, look at that, I can just get in there. So the second push, again, all it means is we allow the signal to engage, and then we allow the signal to retreat. And very often it will do that. If you take a look at your signals, you can see that almost all the bars after the signal bar have had some sort of reaction to that signal. So all the second push entry does is help keep you in line with the market. My concern is that they're going to come up here and try this one more time, perhaps produce a green bar sell. I wouldn't mind seeing a little itty-bitty double top here. I would have a lot more confidence in that than in the current formation. That would also give us our double pullback signal here on the Raptor. That's what a double pullback signal is, by the way. Let's see if I can find you one. Oh, the market's been so whippy of late. All right, well, here we go. So here's a double pullback. It's a teeny tiny one. Or you could say this is the double pullback. But what the double pullback shows you is essentially a little itty bitty double top or double bottom if the market's reversed. All right, so you got a little itty bitty double top, and then from here we expect the market to recover the trend and head lower. That's why the double pullback works. So with what we have going on now, if we get the market come back to 48.12-ish and so the market trades up to 48.12, comes down, produces a signal, that would be our double pullback and something I would have a little bit more confidence in shorting. So that's what I'm on the lookout for. Good question, Ralph. Ralph's asking, Eric, when you use a 4 brick for the slower market in the Raptor, what are your recommended cloud and filter settings? Okay, you're right. You do need to adjust those. So let's go here to the Raptor. And what you would be looking at is we would have a 4-tick brick. Our cloud would be, oh, what did I make the clouds? I believe the clouds are 4 and 6. If they're not 4 and 6, they're 6 and 8. The only other adjustment you need to make is in the Raptor itself. Here, the Hawk brick size, you'll need to dial that down to 4. You'll know you did it correctly when you open up your chart, and it's going to look very much like this. You're going to have the nice smooth clouds. You're going to have the the clear signals with the follow through. I can work through one if you'd like, if you want to see it. So please don't be shy to ask. Well, actually, there's nothing going on, so why don't I get one ready here? Okay, just bear with me a second. All right, so I'm going to load the E-mini here, and you're going to see in a moment what it's what the issue is. All of these things are really pretty straightforward when you start to use it. Okay, so here's your E-mini on the Raptor. And it should be fairly obvious that you're not going to do very many trades here unless you're holding overnight. So these Raptor settings are obviously too tight for the E-mini. Look, we've been sitting here all day and we got one signal out of the open. Yesterday, we didn't get any signal. In the overnight, you got a buy signal. So you get the point. So first thing we want to do is we want to change our data series. So we're going to change that to 4 ticks. What that's going to do is it's going to give us more data per day. All right, so now the day's stretching out a little bit more. But the Raptor cloud itself, very broken up. And when we look for our traditional Raptor signals, things like cloud crossovers and double pullback signals and things like that, they're not very easy to identify. And when they do develop, well, no, they're just not easy to identify. So here we're working on a cloud crossover, don't have it just yet. So that tells us we also need to adjust our other settings. So I think it was 6 and 8 ticks. It's been a little while since I did this, so let's go with 6 and 8 on the clouds. So one cloud will be 6 ticks, the other will be 8. And now we're going to go into our Raptor and change our brick size to 4. And now we take a look at it, and it's a little bit more Raptor-like. See, we're getting cloud crossovers, we're getting signals. Let's try to smooth these clouds a little bit more. So I had 6 and 8. Let's try to change those. We're going to go 4 ticks and 6. There you go. That's the one. So it was 4 and 6. You would be hard pressed to tell me what market this was. If we blocked this out and I showed you this chart, you would be hard pressed to tell me whether this is the E-mini or the NASDAQ or the Dow or crude oil or whatever, right? It looks like a normal Raptor chart. Here's the cloud crossover. Here's the crossover buy signal. Good follow through. Here's a soft edge buy signal right here. Had decent follow through. Here's a double pullback. There's the sell signal. Good follow through. So those are the settings. It was a 4 and 6 tick cloud. 4 tick brick and a 4 tick hawk in your Raptor settings. So if you're trading a market like the E-mini or soybeans or any market that when you open up and you've got your session break lines, so close together, you're going to want to try the alternate settings. And you see, it's really not that difficult. All we ever try to do when we're changing the settings on the chart is just try to give us a normal looking chart. I'm using air quotes, normal looking chart. Andrew's asking, is crude oil setting up for a short? Quite possibly here on the hawk. We've gotten a first micro-macro cross signal here. The market's kind of retreating against us. We may get a macro pullback signal. Problem is that right now crude oil looking very, very sideways. So when you've got a sideways market, remember the best plan of action is to allow it to break out, retrace, or retest, and show you that it can stay out. Yes, I know it's boring. Let it break out, let it retest, let it prove to you that it can stay out, and then get that signal. It's boring, but it will save you a whole lot of money in losses. Okay, so working that double pullback now in the Raptor, we technically, this is a soft edge buy, so getting a little bit of conflicting signals here. Still not 100% clear who is in control, whether it's the buyers or the sellers. They're pretty evenly matched after this morning. All right, come on, give me that signal to sell. Give me that signal to sell, and we'll give it another go. See here on our Eagle trade, we're possibly making the beginnings of our counter trend signal, the rule of three. So we're trying to sell the top end of the trading range, trying to get down to the bottom end. So here, if you wanted to be more aggressive on crude oil, you have a green bar sell on your hawk. Can you cover it up there? Oh, you can. So the green bar sell kind of falling in the middle of this range, but the market does owe you another retest of the low. So there's a chance that we're going to see it try to head lower here. Green bar sell a weaker signal as far as our hawk signals are concerned. So it is a little bit of a gamble as we're kind of in the middle of that mix. Okay, here now on the NQ, big decision time for this market. Bouncing off of this 48.12 area, we took a little bit of a bounce, came down. Early reaction to the support line, so we're kind of skewered right now by this whole 48.07 region. Which it would be nice to see the market trade below there. That would set us up for our short, or keep us in our short here on the Eagle, and give us a chance to short here on the Raptor. I'm sorry, I'm trying to multitask here. As you know, I'm not a multitasker. You can ask my wife. There. All right. I think that's all I'm going to give them. If they can't commit to the trade at this point, then it's probably time to tighten those stops. And here comes that green bar sell signal. Let's get back here now to the Raptor. See whether we're going to get that short signal, that double pullback. There it is. So the signal's engaged, and we'll get our stop in play. And we'll see if the sellers can't take this market back now. When the market's like this too, it doesn't hurt to go in light, you know, throw a onesie on it. If it works, great. If it doesn't, well, it is summertime. You're going to end up with a lot of sideways trading, a lot of ranging markets. At least you don't get hurt too badly. We could start to bring in our stops a little bit more aggressively. If the market fails here and gets back above 48.12, it may choose to rally. Disable the stops for a moment. All right, so all right, we'll leave it as is. I was going to bring my stops in just above this little itty-bitty swing high, that double top. Still fighting with this whole resistance area around 48.07. You see that? Just skewered by it. Oh, come on, you guys, don't make me pull the magic mouse out. There we go. So next obstacle here around 48.03. If we can get below there, we're going to start to see some of these early buyers vacate their positions as the sellers will seem to be in control, and that should send the market hopefully to retesting the morning lows. We'll stay with them here for a few more minutes. If you have any questions, please type away. We'll probably close up the room at the top of the hour. And a reminder that tomorrow we will be meeting at the alternate venue. They're just kind of humming and hawing. All right, no questions. All right, I think we're going to button up the room here this morning then, and I'll catch you guys and girls tomorrow. So have yourselves a wonderful day. If you are trading this afternoon, well, right now the bears do seem to have the market in, or the market has, I think, a slightly more bearish flavor. The bulls did recover almost all the bears' gains, so I suppose we're fairly neutral. However, at the moment, the bears have that last swing. So at this stage, sellers have a slight edge, but we do need to see them take out these lows, otherwise we're going to end up in a sideways drift. All right, catch you tomorrow. Bye for now.